As an asset manager, how are you thinking about the growing risks as far as these geopolitical concerns go for the US and China, between the US and China, given that the restrictions list is expanding?
Yeah, it is a big issue and a major risk, I would say, we need to watch out for in the next few years. But, compared to, say, 1 year ago, 2 years ago, I think the current situation is not as bad for financial investors. At least, there are things that we can forecast. There's a framework how the two countries engaged with each other, so we don't really get big surprises. We're also looking into the second half of the year. I mean, there could be positive news as well. I understand there will be probably some meeting or phone calls between the leaders in the two countries. There's also the possibility that the resumption of the trade talk, the high tariff that U.S. imposed on Chinese exports, whether there can be some negotiation about that. Given the high inflation in the U.S., there might be some incentive for the two sides to talk about the tariff as well. So I would say it's a risk, but it's not a that bad a risk that we have to worry.
Is an exit from accommodative monetary policy in the US a risk for China assets, which have been seeing a consistent buying over the last few months, especially fixed income, Chinese fixed income? Do you think with the Fed's pivot that would change?
Yeah, I would say that's a bigger risk, and it's already materializing, and we're worried about it, and we think the Fed probably will hike rate even earlier than 2023. We think they will probably start to hike in next year. We noticed last week in the FOMC meeting, 7 out of 18 committee members actually forecasted a rate hike to happen next year. So that's bad news for emerging markets. We already saw the U.S. dollar strengthened in the past say 7 days, and then renminbi started to depreciate. So I think that's a major risk we need to watch out in the second half.